Hello traders, welcome to our live trading workshop over here. Now today we got some two positions over here, as you can see in our live trading workshop here. These are more longer term positions. In this session over here, I will look through this as well, and I'll cover this in today's topic. But for today also, we'll be looking at more shorter term, and the one that was flagging up in my system and principles and checklist was actually GBP USD. We can take a look at dollar yen as well. But the GBP/USD was flagging up, so we'll take a look at that on our TradingView chart. So those of you joining in new, what we usually do is that we take a look at some live trading positions, and this was one that was flagging up. I'll take a look at gold as well, which we are actually nicely up here, but we did hold on to it for quite some time. Okay, so that's about 10 days. There's more longer term trades, as I said, just a little bit over under $8,000 there, and just still climbing. Now, and then the next thing that we'll do is we've got a really good topic for you guys today, right? And the topic is going to be, why does your strategy fail, right? And the three execution principles that you can look at to basically overcome that and make it sustain. And the reason is why most traders are inconsistent traders, and the strategy keeps failing and failing and breaking down. They chase after another strategy, is because one, they don't know the HMV factor, the HMV number, how much is really left in that, right? How much move is left, okay? That's the HMV. The second thing, when I say HMV, as I mean in a trade, when you enter it, they do not know before they enter how much move is left. And how do you overcome that? I'll tell you what you need to be thinking about. The second thing is that they don't think in terms of the P metric. This is very, very critical because trading is all about that. And then the third thing also that keeps them in inconsistency is the E factor, okay, which I'm going to be talking about as well, okay. Without that, your strategy will keep breaking down and down, and you'll be chasing strategy after strategy, okay. These are the three main things that keeps you under this inconsistency loop, all right. Now, the other thing that you also do need to know, even after knowing all of these three things, you might say, oh, maybe I think I do know all these three things, but you may still be getting inconsistent results. And the reason is because you don't know the sequence in which to do them for intelligent strategy construction. Now, we're going to be covering all of this, right, in this session. And also the last part, we're going to be doing a Q&A session as well. If you've got any questions, just type it in through the session and we'll answer it all at the end, and also update you with the upcoming events that's coming up. So really exciting live trading workshop we got for you. So this and more in this live trading session. Hi traders, and welcome back. Let's quickly dive into GBP/USD. I was taking a look at GBP/USD. It was flagging up. I'm going to take a look at dollar yen as well. You know what I'll do? I will load that up as well. I mean, the most important thing you guys got to understand while we do all of these live trading workshops over here, the main thing is that you learn how to fish, right? Not that I just give you the fish and the trade signals. Okay, that's not what it's about. And sometimes if there's no trade signal, we just sit on our hands. Okay, that's what we do as professionals. Why are you giving your profits away unnecessarily? So now let's go through this. So you will really very good learn these principles, and then when I go through the topic, this will all be reinforced once again. So when I take a look at this, right, on our GBP/USD over here, on the daily trend, later I'll talk about this. I've talked about this in our numerous sessions. Those of you who've been joining us quite regularly, you'll know this as well. With the framework, actually, what we actually have quantified our bottoms and tops, which then tells you what our trend and phase is on a systematic, logical way, isn't it? So over here, we got the downtrend phase 2, as you can see over here. So let me load that onto the table. I'll show you the table that we usually take a look as well, that actually helps us with all of these updates. Then on the 4-hour, we got a downtrend phase 1. I think I had taken a look at that before. 1 hour, we got a downtrend phase 1 as well. And then on the 15-minute, I've got a downtrend phase 2, right? So in here, this is pretty kind of clear, right? Because across all the time frames, it's in a downtrend. Now, I'll go on to the next four things that I look at in terms of bar mechanics, right? So in terms of bar mechanics, what I do take a look at over here is that, I take a look at the stretch principle over here, so I can see the upper stretch has not been broken, but then the lower stretch has been broken. I just remember, and I can see some of you messaging us as well, what does this stretch principle, all that mean, okay? Now, what you can do is, traders, I'll just give you this quick reference link before I carry on. We got this masterclass webinar, right? All these things, if it's getting a bit over your head right now, all these trends, these phases, this framework, and all of this, the best thing is just under like 1 hour, like within 50 minutes, you will learn all of this, right? And you get so much more clarity than anywhere else. And the beautiful part about this is that you can apply any methodology onto this. It's not a strategy as per se. It's a solid framework that you can apply with any strategy or methodology that you have, and it will just turbo boost its edge. All right. So this is the best one I would say. So under 50 minutes, you will just learn all of these principles. I think the dates have been updated. Once you click on register, then you can basically put in your details, and then you can get all the confirmation details on there. Okay, so once you click on that, it will come up with a pop-up form over here, and then after that, then you will then can choose a date over here, and you can then register for it. Okay, and then in terms of the OE indicator, I mean, that I'll give it to you later, but that's the one I just wanted to mention for now in terms of the webinar link, just in case you're thinking, you know what, I'm not really following all of these terminologies. Okay, so that's good. So I have given that to you. Now, with that said, the stretch principle and all that, I'll give you another one on our YouTube channel later on. Okay, so let me just update this. So we got a lower stretch over here that has been taken out. So you can see, I mean, simply put, the green line has not been taken out. Only the red line has been taken out so far. Okay. Right, now the other thing is the range lines. So the range lines, I'll just quickly do this. Those who have been following us or have been learning from us will understand this. At 11, that'll be 12. So you can see that this one here, that's good. So that one there, right? So that has taken out the lower one as well. Then at 8 a.m., let me just check the 8 a.m. one. Yeah, that has done that as well. Okay. So he's done both of that. All right. So I'll put both over here. I think in terms of a trigger, we're not really getting the best one here. Both. I'll just say both to the downside. I'll show you what the issue is here. And I'll explain this in a minute. To the downside, right? Bro to ST ratio, right? Let me just take a look at that. I saw that at the moment it's not giving really anything conclusive there. Those of you wondering what's this about, this actually is an opening range breakout strategy, but we just have understood it really well. Oops, don't know what I did there. Okay, okay, good. What happened now? Okay, never mind. Just leave it. Right. So I've got this one here. Previous daily high. It's taken out the previous daily low as well, right? So I've got it all collected over here. So let me show you this table here. This is what I'm doing, right? So you see over here, and the objective of this table is to look at these 8 different columns I've got over here. And you can formulate your own one according to whatever instrument that you want to do. And this can apply to any instrument, right? It doesn't matter whether it's futures, it's spot, indexes, currency, doesn't matter, commodities, right? We've done it all on this channel over here, right? So you can go and take a look as well. But in terms of the GPUSD that was flagging up today, I saw that across the 4 columns over here, they're all downtrends. That's my first point, okay? And the reason why I'm looking at all these 8 columns here, we have populated, is first according to my strategy, concept and objective. But the whole premise over here for now, in terms of where I want to enter, is forming a direction bias. Okay? Now, after I formulate a direction bias, I go on to the second step, okay, which I will talk about in a moment. So let's go through a direction bias. So these 4 columns, I've got a downtrend, but on the daily and the 15-minute, I've got a downtrend phase 2. That means at the moment, it's going against the trend, right? So I need you to come back again towards the trend. That's when I will be keen to take towards the trade, okay? That's the whole premise here. So in terms of that, so we're going to be waiting a little bit for them to turn, but for scoring purposes, I'll give this 1 and 1 and this half and half, okay? So I've got 3 out of 4 here. The next 4 columns are my bar mechanics, okay? How the bar is forming, okay? And what is the bar telling me for today towards capturing a certain range? Because remember that I'm going to do an intraday trade. I'm going to enter and exit within the day, okay? So in terms of that, what I'm going to be doing here, if you take a look, I've got this lower stretch here, and both over here, the range lines are also to the downside, so they're all linking towards the down. Bro to ST, nothing conclusive, and this one also previous daily low. So what I've got again over here, I've got 3 out of 4 ticking off to the downside. So when I add this up, I've got 6 out of 8 points, okay? And that is quite a high score because now that I've got about 75%, and my bias will be towards the short side. But just by looking at that, I'm not going to jump into the trade, okay? So therefore now I've got to get to my next step. I've formulated my direction bias. The second step is now timing. When do I exactly get into this trade? Okay, when do I pull the trigger? When do I exactly enter? So to do that, what we'll do, we'll go into here, right, onto the charts back again, and we will look at the levels, and we'll look at also the VSA principles, which I've talked about before as well. Now, when I've got my direction bias, also I overlay the volume as well on top, okay? And when I overlay the volume on top, I can see there's a big volume spike over here, okay, on this buyer bar. But just because it's a buyer bar, we do not go and jump in to buy that, right? That's why we did the whole analysis of the price action before, okay? Based on also, then you can start to take a look at the volume spread analysis principles where I've gone through before, where you're looking on the weakness, right? Even in the strength, isn't it, right? So the weakness in the strength. So you see here there is strength. Apparently, when you just take a look at one bar, when you take a look at all the time frames, they're all usually pointing 6 out of 8 are pointing towards the downside, right? All of the principles that we just took, the points that we took a look at through the table. So that's one thing. So the price action is showing to the downside, but this particular bar of the volume spike is showing to the upside. But then as we know in VSA, is this an uptrust bar that they're going to take out all the stops and then going to come back to the downside, right? So this is what we do. We use the combination of price, which is part of the VSA principles, and the volume to marry up. So this is one of my favorite setups because the volume is showing towards a buyer bar. People might think that, hey, you know what, the buyers are coming in, that's why the volume is supporting. But then in classic VSA principles, we look at weakness on the strength because that might be a fake. So what we do then is that we put our pending order for the low of that bar here, okay, to see if it does trigger us or not, because it's a critical point. And it's also a swing low according to our framework, okay. Now, after I've got that, then where will I then logically put my stops? Let me take a look at the 5 minutes, see if I can get any other high or not here. So over here, I don't think I'm getting anything else different. And again, that top is not confirmed over there. So I'll go back to my 15-minute over here. So in terms of timing, the first place I will enter is 134.30. So you can see that I'm not just jumping into the trade, and I've done this before, and it's definitely preserved our capital and not take unnecessary loss. And then after I've done that, my stop loss in the beginning, because I can't really find a really good place to place that stop, we will put it in here, 13449. 50, 51, 1, 3, 5, 51 with spreads as well. Okay, so I'll put it over here, and what we will then do, I will give the trade call. We'll put it on our Telegram channel as well. Then you can see that. Okay, good. And then from here, what I'll do is I'll place a target, right? So based on the strategy objective, you can have different targets. Some of you might not want to have a target, then you just keep trailing your stop, okay? In this example, I'll put a target. Over here, I usually go for the ATR, and there's a reason for that because we got our stats backing for all of that. So over here, what I'll do, we've got about 9, isn't it? 9, 10 pips, okay? So what I'll do here is, but I've got to be careful in here, so I got to update it accordingly. 3420, okay, 3420, 3421 maybe. Okay, 3. So it's a very small target, the first target that we got. Okay, that we will have. This one here, let me just get a target right. You know, there's been a few instances where we just miss it by a little bit because of some small mistakes we did. But so let me just get that right. So this is critical. You just got to know that you're executing according to the plan. That's the main important thing here. 3421. Okay, that's fine. We'll keep it like that for now. So I'll give that trade call there. Now here, what I'll also do, I'll do this extra thing here. So this is 85, isn't it? On my spreadsheet here, if I put that, I can get the 80%. There's a reason why we're doing that. I'll give you some reference links. You can take a look. But the first place will be the masterclass webinar, as I mentioned. Now, 68 is what we got. So let me do that for you. And I will go on to the topic and you'll see how it all comes together when I talk about why your strategy fails and how I'm incorporating that 3 principles over here as well. So here, what I am looking at, let's see, 3, 4, we need the highest point, isn't it? So here we need the high, 3459. So I'll do that here. So 3459. So 3459 minus 68, okay? I'm just taking away that 3391. Right, 3391. Right, let me put a second target here. And let's see if we do get failed. If we do not, that's fine. We're following according to the plan. Okay, good. So that's where my second target will be. Right, 3391. Let me just check that. If it does go towards the downside for today, all right. I'll just delete that from last time. There we go. We got 2 targets there. I will put this out here. Right, so we got GBP USD short. We got the entry 3430, and then stop loss. We've got the right now. Place it on the other account as well. Just got to remember that if we do not get a trigger, when to cancel it as well. So this is important. So target. There's another thing here that's actually happening. Some of you might be thinking that, oh, this volume, is it was really the buying? Is it testing this low here and then looking to go further up? That can be the reason as well, strength on weakness as well. But in that case, what you're really proposing is that the lower time frame is going to push it all the way up. That volume pressure is so strong that all the higher time frames are going to change, okay? That's why I always say you got to have your strategy objective very clear. In this strategy, we follow according to our checklist, what direction bias we've formulated right from the beginning. For another strategy, you can have a different objective. If you want to just follow purely the VSA principle and just take on the test of the lower time frame, just guiding all the higher time frames. Now, on the target 1, Strategy construction is a big topic, and that's what we go through in Traders Basecamp package. Those of you interested in that, you can always book a one-to-one. You got to apply for the one-to-one, see if you're a good fit for that first. We've got a strong community, and that's why I want to preserve that, because it's not really for everyone how we teach here. 13391 is my target too. Okay, so I've placed that. That will go on the Telegram channel. And as you guys are getting that, what I'll also do, I will place that on the account over here. So remember, these are the longer term ones. I think gold is taking a nice dive today. And on dollar yen, maybe you should have taken a look at dollar yen. That could be another one, quick one I can take a look at. But let me see if dollar does come down, we can do that. Let me quickly place this trade here. Depending on it, as you guys are doing the others. So stop here. 330, right. Let me just get that right. So it's $2. Okay, I'm just quickly just doing the right. Okay, so this one we will do it at two. I'm just doing that very quickly in my mind. The position sizing is very important, traders. Okay, always risk manage. That's very important. 3,451, and then take profit. I'll just put the first target here. Okay, that's what we're good. So that's in place over here. I will monitor that on the other screen. I think with that said, we can see, we just have to observe it and see how that carries on to be. Okay, good. I think I've got that. Dollar yen, I'm just going to take a sneak peek. And this is aligning towards all the higher time frames, the 4-hour, the 1-hour, and I've got that towards the 15-minute as well. Big spike, nice one here. This is a pin bar here, isn't it? The big volume spike. Got a nice test over there. And if I go on the 15 minutes, it's got potential to keep going. I think this setup actually looks even better than the cable. So I will also place this one here very quickly here. Right, this one here on the high, 159.45, 159.47. I know some of you will be thinking, yeah, I really like the topic today. I just want to go through these principles. I'll be doing that, I promise you, very soon. Just bear me a little bit. Then we can tie it all in together. You will see that it makes sense. Application, the theory and the application. Yeah, I think I'll do that one then. Because accounting for spreads as well, isn't it? Yeah, 146 might be a good one. I think we'll leave it at that. This one, the low, we're not sure we'll get a trigger. The low here, we can do it for this one here, 159.27. That was the last buying that came in. Yeah. Remember that your first initial stop loss is just to give it room to move, all right? That's the critical thing you got to understand here. So don't get too fixated on the expected reward to risk ratio. So, and then after that, I'll place the 1 ATR here. Let's see how that goes. 33, I think we'll just do one target here. 159, 88, 78, isn't it? 159.78. Right. And then here, there we go. Right. Oops. Is that correct, or am I reading it wrongly? Let me see. This is so it's just saying 3 pips, isn't it? It's on. Let me just see very quickly. No, it is correct. So it is 33. 1 ATR is quite a bit here. Let me see, yeah. Yeah, it is quite a bit. Let me just see the latest one here. That's 59, that's even more. Oh, right. So something has bumped it up, isn't it? Let me just see this one here. Let me just see this one here. 6. This one is 6, isn't it? And this one here. This one is 20. So overall, yeah, it has shrunk a little bit here. So I think I read that one wrongly. So it's saying about 3 pips, but then the biggest one we will have here, we can take, I see it's going to increase 6. Okay, 159.53 is what we can go for. Okay, so that's what we can go for. And we can trail the stop quite aggressively as it takes that out. But it's quite a strong place to get in. In fact, I'll do this. You see, the timing is very important, traders. Yeah, so that's what we're doing here with the pending orders. This is critical. So 159.46. Okay, maybe we can do with that if it does do it. Okay, good. So I think I've got this one as well. So I'll just post this out on the Telegram channel. We've got quite a bit today. And then we will trail it quite aggressively very soon. So dollar yen long entry, but of course put the spreads accordingly. I've done it accordingly here because Trade Nation gives very quite fixed spreads here, very small spreads. So it's really good with them. 159.53. Okay, good. So I think you guys will get that. And I will quickly do that also. You see the cable doesn't trigger us, isn't it? And on dollar yen, I'll place that here as well. I'll quickly do that here. Let me see here. 157.2, 140. Yeah, we can do the same thing here. We can do a buy stop here and 159.46, and we can 159.28, and then the target profit 159.53 place. Good. So I've got that all placed here. That's what we got over here. Let's see if we do get a trigger on either one of them. So I will keep an eye on that. Good. So that's what we got at the moment. So we got both of that placed over here on GPUSD and on dollar yen. Right, GPUSD, not sure if we're going to get a trigger, but now at least hopefully you guys are understanding the importance of placing these pending orders and not get caught in, not to get overexcited, just click the sell button and get caught in this in between, okay? That's the whole premise of the timing and the pending orders and all of that, right? Okay, good. So now that I've shown you all of this, right now, let me just give you the things that you guys have been asking for, which is one is the topic and the other one is the reference links. So let me go through this very quickly. here, and I know some of you are asking for a little bit more explanations. The webinar, right? So let me just refresh that. I think the dates have been refreshed over here. So the webinar, what it does is that the masterclass webinar, why it's quite powerful. Yes, under 50 minutes, and a lot of people, we've got some really amazing feedback from the webinar that they have attended. Basically, under 50 minutes, you'd start to learn a framework, right, that has been collated over 20, 30 years of research and which actually began in the 1970s and where the institutional quant traders taught of this very systematically and methodologically, quite very powerful, and it blends in with VSA methodology so beautifully and if any other methodology out there, because all it starts off is with a framework, and we call that market structure. And that is something that is an institutional term and something that is not heard in the retail sector. And that's why it's the main reasons also for inconsistency. So it's very powerful concepts here. And you will see that how we build on it and then we overcome the biggest fear and the challenges you have on why your strategy fails. Okay. So highly invaluable webinar. I highly recommend you guys to do it. Quite inspiring as well if you see all our client stories in there who have gone through it and learned the market structure and all of that, and how their trading has really improved. Is really, really impressive. So that's the webinar over here. Once you click to register for it, put all your details in, and then after that, you can select the dates. Next ones are in June and July, and that's about 7 p.m. UK time. That would be roughly about 2 p.m. America time. Okay, you can do the conversions, and we're doing it from Australia. You can take that as well. So, and you can see also what you'll be learning here as well. I know some of you have been saying, oh yeah, usual thing is, usually I get stopped out quite a bit. So I found this very, very helpful. Normally we talk about getting stopped out, how to overcome that, also about target placements and all of these things, okay? All data backed, right? Now, the other thing is some of you have been following us for quite some time. I know some of you have been messaging you saying, you know what, I think it's time that I just get the indicator and just play around it with myself. I've seen you enough. I'm quite convinced. And I just want to see how it works for me. If you want to do that, what you can do is you can head over to this page here on the OE page. We are improving. We're actually optimizing this page. I know some of you say, oh yeah, Thierry, you guys got to improve this as well. Just so that it looks much more better. Yes, I agree. So we'll do that. As you all know, we're not marketeers, we're traders over here, but we'll do our best, okay, to optimize that as we go along. So here, so what you do, you can go through all of this, understand what the indicator is about, and then after that, if you want to get it onto your screens, then you can go and look at the subscription packages. But just one thing I want to mention is that, because a lot of you ask me, frequently asked question is, do we just get the indicator? Is that what it's all about? Not just the indicator, we also give you 3 strategy rules, pre-made examples, right, that you can use along with the indicator. That's in the members portal that you will get login access for. And then also you get group sessions as well, right? Every month you will get this group session that you can join in. And also on top of that, you also get a one-to-one live trading session for the first month. This is very invaluable, where you get with one of our trader coaches or myself, and you will get, and then you can then talk to us about it. If I'm available, I'll take it on, but most of the time it'll be the other trader coaches. Okay, so that's on the one-to-one live trading session for the first month. So you get that all included in the indicator. So it's really quite good. That will help with your ongoing performance. The other thing, some of you are asking about the YouTube channel. How do we follow you guys? I really like the content and everything. What you can do is that when you head over to our channel, you can go under here, right? And you can subscribe to it so that you get notifications from us. Now, one quick thing you got to do, because some of you who subscribe to us have told us that, but we don't get the notifications when you go live. And the reason is because you got to click on this small drop down arrow here. And after that, you click on the all bell icon. In that way, you get the notifications every time when we go live or upload a new video. Okay, there are really some great videos over here. And then the ones that if you want to see when we go live, if you cannot catch us live, what you can do is you can go under here, the live section, and you can watch the replays from the past live streams. The other one I just do want to mention over here is that we also show all our performance as well on the second row here, but you can check our 2025 results, also our Q1 results as well for this year as well. Now, the other thing I did want to mention is the stretch principle. So over here, there will be one which is based on the stretch principle. Actually, I think it might be at the bottom. So if you go all the way down, if you go to multiple playlists here, and if you take a look at this one here, the stretch principle. So some of you are asking me, oh, what is the stretch principle about? This ORB, opening range breaker. What is that thing you're talking about, the upper stretch and the lower stretch and all of that? So you can take a look at this 5 videos here. This would be really, really powerful, especially those of you intraday trading. A really strong concepts there that you can apply to any part of your strategy over there as well. Okay, so good. So we got all of that, and the last thing I do want to do a shout out to is Trade Nation. They've been amazing, amazing broker, amazing client service as well, and they also support our ETM, our annual summit, right? Elite Traders Mastermind annual summit that happens once a year. They support that as well. Support all our live streams as well. Their spreads are really, really tight. We had Clifford, one of the senior managers over there, come onto our live stream last week as well. You can catch that recording under the live section over here as well. Okay, as well. So you can really see, if you want to open up one, you can always take a look at the links that we got on our Telegram channel, and as well as on our YouTube channel as well. Then you can open up a broker account with them. Okay, good. So I think with that said, we can nicely, swiftly move on to our topic for today. I think I had a few questions about the ETM Summit. For those of you who want to find out more about the ETM Summit, you can always email us, right? And we will send you the links on that client service at masterthemarkets.net. Good. I think with that said, let's go on to today's topic, why your strategy fails and the 3 execution principles to overcome that, okay? Right, now the 3 main reasons, right, why people are inconsistent, okay, and the strategy fails and you keep chasing and you waste like 10-15 years doing that is because first you don't know the HMV number, okay, you don't know how much move is left on a particular trade, okay, when you enter it you do not know. The next thing is you don't think in terms of the P metric, which I'm going to be talking about as well. The other thing also is that you don't know the E factor, okay, which is very, very critical, and you don't know how to build strategies around the E factor, okay. That's what the issue is, right, over here. That's what causes all these issues over here, right? So, and then the final thing is, let me just give me one moment. I think this one is just playing a little bit over here. Let me just get that sorted. Just give me a moment. I don't know why this is coming out here. It's losing its balance a little bit. Okay, got that. Okay, good. So that one down, right? And now I was talking about the E factor. So you need the E factor to build your strategies. And then finally, the bonus thing is that what I want to tell you all is that even after these 3 factors, right, you can still find yourself being inconsistent. And the reason for that is you don't know in which order you must do this for your strategy construction. So I'm going to be covering all of this in this topic and more. Right? Good. I think with that said, let's go on to the first one. Okay, why your strategy keeps failing. The HME factor is basically referring to how much move is left. Whenever you enter a trade, you must know how much move is left so that you do not get caught out and your profits become a loss. So if I go back to here, you see, if I do want to put my pending order over here, I just want to know that after I do get entered, how much move is going to be left, right? That's how I place my targets. These are all data backed. I'm not guessing out of thin air. If you saw how I calculated it, this is all based on that HMB factor. We know all the data for that, okay? Right. Now, so that's the first thing. So how do I overcome that? Those of you who do not know how to overcome that, that's the principle one, as I said. To know that, you should know your OE number. Okay. What is the OE number? We explained this thoroughly in the masterclass webinar. Basically, it means open equity or open profit. How much open profit is that going to be on the trade once I enter? And how do I find that out? You see, at a click of a button within seconds, I can actually figure that out over here. So I'll show it to you in real time. Don't want to take up too much time here because on the masterclass webinar, we show you this. So if I just click on this, right? If ATR, let me just show you on pips first. And if I do that over here on the 15-minute time frame, right, it will tell me immediately. You see, within seconds, it just told me. What I'm showing you over here is that, you see, if I put, you see, on the 15-minute, if I put a 5 pip target, that's going to be have a 70% chance of getting that on the 15-minute time frame. If I put a 10 pip target, it's got a 50% chance. But remember, this 50% or 70% chance is based on you choosing every single dot, right? Which is what I have put over here on the all section. I can also filter it down to just trend alignments and counter trends as also. And all this has been programmed by our clients. That's why I'm telling you that when you come onto the webinar, it's been very, very inspiring to see the clients that have gone through, just like you've seen our YouTube videos and then come on to us, got inspired by all of this, and then went to program it for us to show the testimony of the product and also that the community itself uplifts the community, right? So we've had all of that. But the reason is what I'm showing you, all these stats tables were all done by also our clients as well. But what this is telling you is that if you were to choose all the dots, then you get a 50% chance. But if you start incorporating the VSA principles on top of here, plus other methodologies you can mix in stochastic, RSI, whatever that you want, Fibonacci, fair value gap, right, name it, you can overlay on all of this. And what that means is that when all of them confluence together, you can say, you know what, I think this dot, this swing, right, that is confirmed at top, is going to go further more distance, right? It can go to 10 pips, you can go to 20 pips even, right? And I'm going to select that. That's how you can do this and combine this with this data that we got over here, right? And I've shown this to you in real time as well. We just don't jump into the trade. We strategically put our entry levels such that all the confluence of factors come into play, and you can see this in real time in GBP USD. I didn't jump into this short trade and then get caught out in this consolidation, right? It's very, very critical. Now over here on the dollar yen as well, again, you see another example here on the entry and the stop loss here. We're not getting caught out again. But the main point I want to drive through is I know my open equity or open profit number, my target number, that it will get there on a probability basis. So the first principle that we apply so that the strategy doesn't keep failing is that we know our open equity number. Okay, that is the institutional term which is called open equity number, which is very useful for target setting on a probability basis. Okay, if it's just quite overview, don't worry, on the masterclass webinar we go through this much more in detail. Right, the second thing why your strategy fails is, I'm just showing this in diagrammatic about the how much move is left and all of that over here. That's your swing. Every time when you enter, always know how much move is left, or we call it open equity. That's the institutional term. Right, with that said, let's move on. The second thing why your strategy fails is because when you place a trade, right, you have a fear of the outcome. Okay, so when I place this pending order trade, because you might be fearing, hey, you know what if it triggers me and then goes straight up? Or what if I enter on this trade right now to go long because I'm seeing this big buyer bar and I want it to go further up, but then once it does this, you start to get fearful, right? You're fearful of the outcome. And because you got the fear of the outcome, and let's say if it does lose and you got 4 losses in a row, or just 1 loss in a row even, or just 1 loss on that trade, you start to become fearful of placing the next trade. And you start to think that the strategy is failing. The strategy is not working anymore. And you see, the reason for that is because one, yeah, you got the fear of the outcome, that there's going to be a win or a loss. And if it goes a little bit against you, you're getting scared. But the real reason why you're really getting scared is because you're thinking in terms of one trade, right? Trading doesn't work like that. You cannot just keep thinking just about one trade, right? You got to take a series number of trades. And that's how you can assess and see. And how do you overcome this, right? Stop thinking in terms of one trade. And how should you be thinking? You should be thinking in terms of the principle number 2, which is you should be thinking in terms of the P factor. What is the P factor over here that I'm talking about? the P factor, what I'm talking about over here, is that probabilities. You got to think in terms of probabilities. Everybody says that trading is probabilities, but I still haven't seen anyone online which shows you a probability table based on what's the probability of the trade hitting your target, right? Nobody shows you that. Now over here, we only at Master the Markets, I would say the only company which actually are showing that through this stats table here. You see that I've shown you before, that I've shown you on the GPUSD and the dollar yen as well, in real time, right? That's what you're seeing there. So this is what we are after. You got to think in terms of probability. When you think in terms of probability, you and I know that a probability cannot be made out of one trade. It can only be made out of a series of trades. Now, at least very minimal sample size is at least 20 trades to see. And what are you really looking from there? You're looking at the drawdown, if the drawdown of your strategy has been hit or not, right? If it's then it might show signs of its strategy failing. But you got to do all of this. It's so many steps before you got to construct your strategy really powerfully, okay? But this is the second thing that you got to keep thinking in terms of that if you want your strategy to succeed and not fail. Just stop thinking in terms of one trade. Think in terms of probabilities. Think in terms of series of trades, okay? That's the second principle. Now, and then as I said over here, based on the second principle, then the third principle also is that what you start to see is that sometimes if you go through massive drawdowns, okay, the fear will start to kick in as well, okay? The fear will start to kick in as well. And then you will start to think, you know what, is a strategy failing? Should I just bin it and I just run? You know, in my beginning years, if a strategy was just failing just over 5 trades, let alone 1 month, if it was failing, I'll be like, screw this strategy, let me run to the next one. And easily, you would waste about 2 or 3 years doing that. But, instead of thinking that, when you're going through a drawdown, is the strategy failing? You're going to ask this important question, which is coming to principle number 3. The important question that you're going to ask yourself is what Ray Dalio asks. And those of you who do not know Ray Dalio, he's the biggest hedge fund manager with $160 billion assets under management. And he asks the question, which you got to keep thinking over months and years, right? You got to keep challenging yourself on this. Why must your strategy continue to work? It's a very, very important question, okay? Why must your strategy continue to work? Why must it overcome and pull through those drawdowns, right? So based on that is what principle number 3 is about. So now you got to think about the strategy E factor, and the E factor is what we call the edge, okay? What will make that strategy continue to work, or in other terms, what will make that strategy sustainable, scalable, and reproducible, right? And for that, for the edge to be built very strongly, and that's where we get into the realm of strategy construction, which is a very wide topic, but at least the principles in there to make a strategy sustainable, scalable, and reproducible, and help you overcome this fear that when you pull through a drawdown, that you're going through a drawdown, that the strategy is failing and I'm binning and go to the next one. You got to build a strategy based on the CO factor, which I've talked about a little bit in our previous live streams, and that is based on the concept of the strategy and the objective of the strategy. We go through all of this very much in detail in Traders Basecamp, and I must say we are really the only one company which also talks about strategy construction. I've never seen anyone else really talk about it, and because we have been trained by institutional quant traders, and that's why we think in this way. How to make your strategy sustainable, scalable, and reproducible. And some of the top traders that we've interviewed also think in terms of this as well. One of the guys that we've interviewed is a big market wizard, Tom Basso, right? Was interviewed by Jack Schwager in the Market Wizards book. He also thinks in this way. Right? Keep challenging yourself. Why must the strategy become sustainable, scalable, and reproducible? That's how you build your parameters around it as well. Now, that brings me to the final thing. Now that you understood all these 3 principles over here, but you might still be thinking, but how do I actually integrate all of them, right? How do I actually, what's the strategy construction sequence, okay? How should I think in terms of these principles? What's the best way to look at it? So what I would say to give you a guideline is, first, you think about the edge. before you build your entry rules and all the other 5 components of the strategy, think first in terms of edge. Think edge. Why is the strategy I'm going to build going to be sustainable, scalable, and reproducible? What is the concept and objective of this strategy? If I were to give you an analogous example, it's like building a car, right? If I were to build this car, I'm a business, I'm going to build this car, either it's a racing car or a family car. I've got to ask myself, why should I choose to build a racing car? Why will that give me a competitive advantage against building a family car? Or what is the competitive advantage of my racing car compared to all the other racing cars out there? So these are the questions that we got to ask ourselves. After you got that, then based on that concept and objective, then you choose the tools that you want to choose to build that kind of car or to build that kind of strategy, but with that edge. Now you're convinced that I'm choosing those tools because I know that those tools will help me build this strategy that is sustainable, scalable, and reproducible. After you've thought about edge, then you go on to the next factor. In your edge and your particular parameters, then what you do is factor in this factor, which is the OE factor, which is how much move is left, especially in your target section of your strategy, okay? How much move is left, the OE factor. There are 2 more stats as well that you can include in, and then that will be also talked about in a masterclass webinar that you can take a look at as well. Then the final thing is, after you know all of these things, okay, you're thinking in terms of edge, that's good. I know why my strategy must sustain, scale, and reproduce, and why it must continue to work. I also know my open equity as well, how much move is left on every time I enter a trade. The final thing, even if I do know all of this, I can still stop to execute consistently and get inconsistent performance. I've got to train then my mind, because after I take 1 or 2 trades, I can start to get fearful if it's 2 losses in a row or 3 losses in a row. And that's when I got to remind the mind that, you know what, I just can't think in terms of 1 trade or 2 trades, even 3 trades or whatsoever. I got to start thinking in terms of probabilities. If there's a 70% chance of it getting to the target in a sample of 100 trades, I must understand that 30 trades won't get there. I must live with that. But I don't know in what order those 30 losing trades might come. It might come in the beginning, maybe 3 or 4 of them might come in the beginning. Then after that, maybe 5 winning trades might come, and all of that, not so on and so forth, right? So that you must understand, and you must keep thinking in terms of probabilities. So to conclude and to summarize, so this is what I will actually say over here, which is, in summary, for your strategy to stop failing continuously and you keep chasing on the strategy, get knocked out, thinking of to quit, what you need to think of in terms of these 3 principles. And the sequence, what I would say is, first think in terms of edge, okay? That's what you got to think. Then the second thing, then formulate your strategy, then think in terms of OE, okay? How much move is left, how much open equity is left. Then the last thing I would say is think in terms of probabilities, okay? So that this will help you to pull through and the drawdowns and consistently execute your trade as long as you're convinced about the edge of your strategy. So these are the 3 things. Think edge, think open equity, think probabilities. Okay, good. And think in that sequence before you build your strategy that is sustainable, scalable, and reproducible. Okay, good. I think with that said, that's the topic for today. That will be, hopefully you guys found some good value out of that. Those of you who want to participate fully, what you can do also on the YouTube chat or in the comment section, you can write down one thing that you took away from today, right? This will ingrain it further into your psyche as well, okay, that you will implement it later. So do that, write that into the comments box. If you have any questions so far as well, do ask me about them as well. So you see GBP/USD, that's a good thing. We got our pending order in the right place. We've still not been triggered. Same thing for dollar yen. They're just hovering around, okay? So you can see how that is important. Good. I think with that said, I'll just give the reminders again. Masterclass webinar, I've already pinpointed that quite a few times. I really highly recommend, once you click on that, fill in your details, and then after that, click on the date that you want to participate for June and July. We also got the indicator as well. If you want to put it onto your screens, you've been following us for quite some time. That's that one here. You can read through that. As I said, you just don't get the indicator. You get also the strategy rules, the monthly group sessions, and also for the first month, you get a one-to-one session. Really highly invaluable. YouTube channel. After you subscribe, click on the drop-down arrow, click on the all bell icon to get notifications. And the other thing is, if you want to go through our live sections from before, go and click on over here, the live section category. And the last thing is the stretch principle here. You can, if you want to find out more about it, you can find out over here on the stretch principle videos here. The final thing then is a quick shout out to Trade Nation. Those of you who want to open up, really great guys, really good customer service as well. Proud sponsors for our ETM Summit, which happens once a year as well. And the other thing as well, Trade Nation supports all our live streams. Clifford was here on our last live stream as well. Really very friendly. Those of you who've been using it always have said that, you know what, really friendly guys. I really like them. And the spreads are very tight as well. Okay, good. So that's on Trade Nation. If you want to open up an account, there are links in the Telegram channel as well. There'll be links in the YouTube channel as well. You can follow that through as well. Right, traders, I think with that said, I think I'll keep an eye on these trades over here and see how they perform in the day, and I'll manage it through the Telegram. We'll manage it through the Telegram channel. Other than that, I think we've overshot a little bit, just a little bit, still on a little bit past time, 3 minutes past 3. But I guess that's pretty much that I've got for on this webinar. And as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master. Take care and bye for now.